Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So happy 420 everybody, my favorite day of the year. Oh, I'm early. Well, looks like I'm recording today's video on extra hard mode. And in today's video, we're going to be discussing why Volkswagen is literally going to be paying Tesla hundreds of millions of dollars in exchange for Tesla doing absolutely nothing. And I know this is April 1st, but this is not a joke. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. So we're reading from Reuters. Exclusive. Volkswagen to buy credits from Tesla in China to comply with environmental rules from sources from Beijing. A Volkswagen joint venture in China has agreed to buy green car credits from Tesla to help meet local environmental rules. 3 people briefed on the matter told Reuters. Now, I just want to jump in here. 3 is certainly better than 2. 2 is certainly better than 1. Of course, the credibility here, I don't know for sure. Generally speaking, Reuters are pretty good in their reporting. These sources, the fact that there's 3 of them is a pretty good sign. But again, we could be just hearing rumors and gossip here. But let's assume that what they're reporting is accurate and true. The deal, the first of its kind to be reported between the 2 companies in China, highlights the scale of the task Volkswagen faces in transforming its huge petrol/gasoline car-making business into a leader in electric vehicles to rival Tesla. Good luck rivaling Tesla anyway, I know what they're getting at, but yep, cool. Shares in Volkswagen, the world's second biggest automaker, have soared this year as investors warm to its plans to go electric. But in China and elsewhere, the German company is still heavily reliant on traditional combustion engine vehicles. China, the world's biggest auto market where over 25 million vehicles were sold last year, runs a credit system that encourages automakers to work towards a cleaner future by, for example, improving fuel efficiency or making more electric cars. Manufacturers are awarded green credits that can be offset against negative credits for producing more polluting vehicles. They can also buy green credits to ensure compliance with overall targets, though trade is usually between affiliated companies that share a major stakeholder. Effectively, we're talking about the zero emission vehicle credits. Some form of these type of credits is likely to be used and is being used by governments and nations globally to incentivize the adoption of electric vehicles. So I suspect over the next few years, we're going to see a lot of these types of agreements between many different companies in many different countries all over the globe. To help meet increasingly tough targets, Volkswagen's joint venture with state-owned Chinese automaker FAW has agreed to buy credits from Tesla, the sources said, declining to be named as the talks were private. Obviously pretty smart, you want to be a source, be an anonymous source. Volkswagen declined to comment on the deal. It said in a statement it was strategically targeting to be self-compliant with rules in China, but that if required, it would buy credits. Don't you love that corporate horse shit? Basically, translation there, yeah, look, we're not making enough electric vehicles and we're going to get a huge, gigantic fine and we don't really have much choice, so we're going to pay one of our competitors to keep out competing us and eventually probably maybe put us out of business. FAW Volkswagen sold 2.16 million cars last year. Now, just jumping in here, guys, this is a very important point. We're going to do some numbers in a moment to see the potential implications of this deal. They're huge. The business and another Volkswagen venture in China with SAIC Motor were among the most negative credit generating automakers in the country in 2019. The venture's gasoline sedans and SUVs have so far proved to be far more popular in China than their electric vehicles. Now, this is also an interesting note because, as we know, the EV market in China itself is burgeoning, which suggests that what Volkswagen have put through this partnership with FAW into the Chinese market in terms of electric vehicles, horse shit. It's unclear how many green credits FAW Volkswagen will buy from Tesla, but FAW Volkswagen's offer was around 3,000 yuan per credit. That's about 450 or so US dollars, higher than prices in previous years, the sources said. The deal effectively sees Volkswagen, the biggest foreign car maker in China, subsidizing a rival while the German group ramps up production of its electric vehicles. Its ventures in China plan to roll out 5 electric ID series models this year. In the United States, where regulators also set environmental requirements, Tesla has sold regulatory credits to rivals such as Fiat Chrysler, which we know about. That deal was worth about 2 or so billion US dollars, yes, billion with a B, which is now part of Stellantis, but it has not so far reported any deals in China where it started making cars in late 2019. So this is really important. This is the first of potentially many deals in China with Tesla and other companies trying to deal with these credits. Of course, Tesla doesn't produce any gasoline cars, any internal combustion engine cars, so they have an unlimited number of credits. They don't need them to offset anything because they're not producing stuff that's giving them those negative credits. Tesla's revenue from selling regulatory credits totaled $1.58 billion in 2020, according to a regulatory filing. So FAW Volkswagen last year sold about 2.1 million vehicles. Let's assume that they need credits for about 10% of that fleet. We're just doing ballpark numbers here to get a sense of the financial implications for Tesla here. So, if this is the case, we'll multiply that by 10%. We're now looking at 210,000 credits. Each of those 3,000 yuan, about $450 per credit. Now remember, this is money out of thin air. What does Tesla need to do in order to get this money from Volkswagen? Like really? They need to do nothing except sign the deal. That's it, okay? Maybe a bit of negotiating, then yep, we'll let you guys pay us a shit ton of money, no problems. Why? Tesla doesn't need the credits, okay? They're like a waste product of their production process. They're accruing these credits regardless. Doesn't matter whether or not anyone wants to buy them, irrelevant. Tesla keeps producing vehicles and accruing more credits. And I have a funny feeling most automakers, as they scramble to transition to electric vehicles, struggle to actually get enough cell supply to ramp up production, are going to desperately need to buy credits from Tesla and some other companies for a number of years. So, what are the implications of this? If we're assuming that 10% of the fleet requires credits, we're talking about $100 million. What if it was 20% of the fleet? We're now looking at nearly $200 million. Now there's two really important implications of this. The first is that Tesla's production will approximately double year over year between 2020 to 21. So all other things being equal, that means Tesla will have approximately double the number of surplus credits in theory that they can sell to other automakers who desperately need them to avoid fines. Whether or not they will sell all of these credits, I do not know. But the point is quite simple. Tesla doesn't need any of their credits. It literally requires zero effort from Tesla to accrue these credits. At some point in the future, another automaker knocks on the door, hey Tesla, yeah, we need to avoid these fines, yeah, we'll take a few hundred mil of those credits, another one. Again, I don't know how many of these will be utilized, but the point is, the more vehicles that Tesla produces, the bigger the mountain of credits they can potentially sell to other automakers in the future. So we already know that Tesla's competition has been paying Tesla for a number of years for these credits, literally billions of dollars. I mean, one way to think about this, Tesla used the money that they got from these credits to buy $1.5 billion of Bitcoin, now worth about $2.5 billion. Tesla has literally made billions of dollars from these credits on top of the billions of dollars they'd already made selling these credits. I know it's a little bit meta, but that's one way to think about it. The point is, it's kind of embarrassing for other companies to be having to pay Tesla for these credits, but they don't really have any other choice. And the second of these two massive implications is the fact that Tesla are just so much more capital efficient than any other company. What do I mean by this? Well, Tesla's finding new ways to do more with less. They're becoming even more resourceful. So another way to think about this, every dollar that Tesla has is effectively like another company who has maybe $2 or even $3. Tesla's getting so much done with so fewer resources. So let's say for every $1 billion in regulatory credits that Tesla sells in a single year, that may be like Tesla actually getting $2 or $3 billion worth of additional capital, considering how far they've been able to make their cash go in the past. This is going to allow Tesla to build multiple factories, invest heavily in R&D, drive their costs down further. I mean, it's just an absolutely ridiculous feedback loop. Let's try to put ourselves in the shoes of a legacy automotive manufacturer. By this stage, unless you're literally brain dead, in which case it doesn't matter anyway, you're fucked. You know that Tesla is the leader, and you know that your goal is to catch up to Tesla to transition to electric vehicles as fast as you possibly can and get off internal combustion engine vehicles. There's just one problem. Doing so is going to cost you billions, tens of billions of dollars. It's going to cost you thousands of job cuts. You're going to need to hire thousands of new people, very software heavy, totally different engineering in terms of batteries, electric drivetrain versus internal combustion engine vehicle. You need to completely gut your business. Violent, destructive, damaging, unpleasant, just a gnarly process. Going to bleed billions of dollars. It's going to be an absolutely catastrophic, painful, brutal process. You probably won't survive, but you must try. And simultaneously to this, you must also pay Tesla, your number one competitor, the company that's likely to put you out of business, a shit ton of money, hundreds of millions of dollars, possibly billions of dollars, because you're not quick enough to transition to EVs. To add insult to injury, if it couldn't get any worse, not only are these companies facing their destruction because they're not moving to EVs, they're also facing further destruction by having these huge fines imposed on them by governments around the world. And third, the only way to avoid this form of destruction is to pay another company, Tesla, to eventually destroy them anyway. I mean, I just don't know what to say. This is just amazing and horrible to watch at the same time. The hilarious and tragic thing about this situation is it's not an April Fool's joke. although I'm sure VW really wish it was. It'd be a hell of a lot funnier than their attempted rebrand to Volkswagen. I mean, what else can I say, guys? This is actual real life. Companies are paying Tesla effectively to build new factories, to invest in Bitcoin and make an enormous profit, to troll people, to accelerate the development of new products, to drive down their costs further. I mean, it's just absolutely absurd. Let me know in the comments below, what's your best guess for how many billions of dollars of regulatory credits Tesla will be able to sell in 2021? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.